Bitcoin just crossed $60,000. It wasn't this high since like 2021 when it reached its peak of $64,000. I mean, back in 2022, a lot of people thought that that's the end of Bitcoin because when the Fed raised the rates, a lot of crypto companies started going bankrupt one after another. And the price of Bitcoin itself literally collapsed to around like $20,000. But here we are in 2024 and the price of Bitcoin is rising faster than ever. Over the last 12 months alone, the price of Bitcoin increased by like 200%. It was one of the best investments you could actually make. So if you have missed your opportunity to invest in crypto or Bitcoin in general in 2020 and 2021, this is your opportunity. Now is the time to jump in and start investing. Experts are jumping in and telling their predictions about where the price of Bitcoin is going to be 6 months from now, a year from now. Some people are expecting the price of Bitcoin to hit $100,000. Some are estimating it to be $500,000. And some people have outrageous claims that Bitcoin is going to cross $1 million by the end of the year. If all of these predictions are true, then it makes sense to even borrow money and buy Bitcoin at $60,000 if it's gonna hit $1 million anyway. But that's not happening and this is not financial advice. So let's take a moment and understand why the price of Bitcoin is rising again. Is it just a bubble that is going to burst in the future, or the price will keep growing? If you're ready, give this video a thumbs up and let's dive in. At the beginning of the year, BlackRock launched its first crypto ETF. You see, BlackRock is one of the largest companies out there. This company alone controls over $10 trillion. This is one of the companies that calls the shots behind the scenes. And $10 trillion is almost half of the GDP of the United States. And if you count in Vanguard and State Street, another two Wall Street conglomerates, then they control a combined wealth of $20 trillion. That's as much as the entire GDP of the United States. And now think for a moment. These three companies are getting serious about getting into crypto. Think about what that could possibly mean for the crypto industry. Wall Street is very careful when it comes to investing. When you're managing like trillions of dollars, and if you're down by 1%, you're literally losing hundreds of billions of dollars, which is why Wall Street prefers a more conservative approach when it comes to investing. Of course, they've been buying Bitcoin directly the last few years, but now they want to buy through an ETF. An ETF is basically an investment firm that invests in multiple assets. That's one way to minimize your risk when it comes to investing. I mean, take a look at the price of Bitcoin. Today, it's like $60,000. A year from now, it could be down by 50%. Like 12 months ago, the price of Bitcoin was less than $20,000. 2 years ago, the price of Bitcoin was like $64,000. 5 years ago, it was less than $10,000. So if you're a huge investor with trillions of dollars, you don't want that kind of fluctuations. That's not in your interest. You want to balance your portfolio to a certain extent because you have so many clients who rely on you. They don't want to open their portfolio and see that it's negative 50%, which is why an ETF solves that problem. So a crypto ETF is going to be a financial firm that is going to invest in the best performing crypto, for example. And when you buy a share of that ETF, you're literally investing or buying a small share of the entire crypto industry. Think of the S&P 500. What is the S&P 500? S&P 500 represents the top 500 best performing companies of the United States. So when you buy a share of the S&P 500, you're buying a small share of the top 500 companies in the United States. So if you zoom out and take a look at the historical data, you will find out that the annual return of the S&P 500 over the last 100 years was around 10%. Yes, some of these companies went bankrupt, some of these companies performed really bad, but overall the economy kept growing, which is why the S&P 500 kept growing. Now, if you take that concept and compare it to crypto space, for example, you'll see the exact same thing. Over the last 15 years, the crypto industry went through a lot of storms. A lot of crypto companies went bankrupt. A lot of coins went bankrupt. Bitcoin was down by 50, 80, or 90%. But overall, over the last 15 years, the crypto space kept growing. Today, it's worth over $1 trillion. We have more and more investors interested in the crypto space overall. They're buying more and more Bitcoins. So by investing in a crypto ETFs, you might not be making astronomical returns like 1,000% like some people make in the crypto space, but you're at least taking advantage out of this growth by making a decent good return, which is why all of these Wall Street companies jumped in and launched their crypto ETFs. Now, the question that a lot of people are interested in is that how high the price of Bitcoin is going to rise. You see, it's really difficult to actually find out the true value of Bitcoin because it's not like a stock. When you analyze a stock, you can take a look at its financial statements, find out how much the company is making money, what is their strategy to grow. So you can find out whether the stock is undervalued or overvalued and how much it truly costs and will it rise or fall. But when it comes to Bitcoin, it's not really an asset that you can actually value in that way. The only way to measure it is to take a look at the number of people who are using it. I mean, Bitcoin initially is supposed to be like a currency, but people don't treat Bitcoin today as a currency. They treat it as an asset like stocks or real estate, where they try to buy Bitcoin in order to sell it at a much higher price later. But there is one way to find out if the price of Bitcoin is going to keep rising. You see, whenever you're analyzing any asset, doesn't matter whether it's stocks, crypto, or real estate, what's important is that what investors think about where that asset is going to be 6 months from now, a year from now, any time in the future. If investors are convinced that the price of this asset is going to dramatically rise over the next 6 months, for example, they will invest in that asset because they know that they're going to make money on that asset. Let's say, for example, you know for a fact that the price of Apple stock is going to rise by 50% 6 months from now. Are you going to buy Apple stocks? Of course you will. You will just use all of your savings to buy that asset because you know that you will make 50% on your investment. And now think about what's happening with crypto. Now, all of these investors are looking at crypto and understanding that Wall Street is serious about crypto. They're launching crypto ETFs, which means that they will be spending trillions of dollars on crypto. That will increase demand for crypto, which will lead to the price of crypto to increase. That will push all of these investors to start buying Bitcoin, which means that will increase the demand, leading the price to increase even faster. That's what we call a self-fulfilling prophecy. So will the price of Bitcoin keep rising? Most likely, because we have so much demand that is coming in. But how high it will rise, I can't really tell you for a fact. But you have to keep in mind that at some point, some of these investors might want to cash out and they will start selling their investments. They will start selling the Bitcoins and the price of Bitcoin will collapse to a certain extent. Now, that doesn't mean that it will just collapse to $1 or go to zero, but it will crash to a certain extent, which is why the best way to invest is to take advantage out of the power of compound interest. If I would give you a choice of $1 million today or a penny that doubles in value over the next 31 days, which one would you choose? Now, most people looking at this equation will say that I will choose $1 million. Because $1 million is a life-changing amount. You can take that money, invest in the S&P 500, and you will have a passive income of $80,000. But if you stop for a moment and think about it, a penny that doubles every single day for the next 31 days will equal to over $10 million. And that's the power of compound interest. That's the power of starting investing early. So if you're serious about investing, go ahead and check the Intelligent Investing Academy, where you will learn everything you need to know to start investing and start making money in the stock market. And you will be able to understand people such as Larry Fink. Larry Fink is the CEO of BlackRock, one of the most powerful people in the world. And according to him, crypto is going to play a more important role in the financial system in the future. Over the last century, we have built an entire infrastructure to make it possible for everyone to buy and sell assets such as stocks and bonds. But according to Larry Fink, that's going to change very soon because we have something called blockchain. If we take every single security out there and turn it into a token inside the blockchain, it's going to make it much safer and much faster to trade. which is what Larry Fink calls the tokenization of the financial industry. What's happening with crypto right now reminds me a lot about the internet back in the 1990s. Back then, we had an internet revolution where internet companies were booming, but that boom resulted in a bubble that burst in 2001, crushing most of the internet companies. But then in 2002 and 2003 and 2004, Wall Street started getting serious about the internet and started pouring billions of dollars into internet companies. Yes, all of these companies started growing much slowly, but that growth was much more stable. And crypto is right now right there. We had a crypto crash in 2022 and Wall Street realized the potential of crypto, which is why they're getting serious about it by launching a crypto ETF. It's really difficult right now to predict where the Bitcoin price is going to be 6 months from now or a year from now, but the fact that we have Wall Street getting serious about it and launching ETFs means a lot for the market.